Søren Krogh Knudsen, CEO of Columbus. Last week you released your 23 results, so let's take a look at those. Let's take a look at first 23. Did it go how did this year went, and was it better than your expectations?
So we were satisfied with the 2023. It went pretty much in accordance with our expectations. It's a big business, so there can be small variations, but overall we were quite satisfied with the delivered growth rate. We delivered 11% in Danish kroner, but there was some currency headwind, so that actually equates to 15% in organic growth if we take it in local currencies. And I think also quite important for us is always to finish strong. So if we look at the fourth quarter in isolation, it was stronger than the year on average, which is something we like to see because it bodes well for the beginning of the next year.
Yeah.
You know, when we finish strong, we start strong, and that sets us up for further success.
Yeah, but then let's look into 24. This is the first year in your full year in your new strategy period. A strategy period where you want to grow 10%, but maybe even more importantly, double the margins. A very, very hard task. So if you should look at the 24 in the view of your guidance, how do that set you up to deliver on those new strategies?
Yeah. So in terms of the goals we've set ourselves for the entire strategy period, it's important for us that we get started in the very first year. Obviously, it takes the entire strategy period to deliver on the EBITDA improvement, but we need to deliver improvements already in 24. But sort of decomposing it, revenue-wise, we have been delivering the growth rates that we expect to deliver for quite a while, so we know what that means. We've also been above those growth rates. Yeah. So that number might look a little bit conservative, annual growth of 10% when we're currently above, but it sort of has two things baked into it. One is a little bit of caution in terms of the external environment. It is tricky to foresee how that will develop. And secondly, a little bit more selectiveness when it comes to the future revenue we engage in, because we need to see that adheres to a higher margin requirement than before. Then on the EBITDA improvements itself, it's not a miracle plan in any way. It's not sort of we've decomposed those improvements into very understandable things for us. It's very much an operational excellence exercise. We know which handles to pull, but it's not something we can do overnight. So I think the important thing is that we should make progress each year towards the 15. So we don't have that huge hockey stick in the final year.
That is what you guide next year. Incremental.
Yes. An improvement indeed. So we guide 9 to 10% EBITDA margin this year, which is up from 7.6% for 2023.
Perfect. And then IT, we hear a lot about customers postponing IT investment. Has been an unsecure year in 23. How do you look at going into 24? Is that going to clear a little bit more up, or are customers still a little bit hesitant?
Customers are still more cautious in their investment strategies, and we don't expect it to become better in 24. But investments are still being made, so it's sort of changed the dynamics on both the way, the length of the dialogue and the sales process with the customers, and you need to account for that in your pipeline planning. Yeah. Then it's not such a big problem, because I would venture that the investments are still going in there, but it's a longer cycle. And then the second thing you need to account for is that many customers chop major investments into to smaller bites, and they ensure that they have exit points if they're not satisfied with the progress or the proof points delivered. So you have to be really on the ball in terms of demonstrating the progress, and that in itself drives slightly higher handling costs, but I think it drives a much more healthy customer advisor relationship in the long term. So I think everybody in the industry should actually be happy about this development, because it leads to a healthier result.
So that tells me 8 to 10%, then you must actually be expecting to grow above market growth. So is it simply about you being in the right place with the right offering, or why is it that what is baked into those expectations to beat market again?
Yeah, well, the foundation is that we've already been doing it in 23, so we know we can do it. I think the most important components for us have been the key elements of our Focus 23 strategy, so the strategy that we left behind, but we carry those decisions with us and we still stand by them. The first one I'd pull out is the industry expertise. Really doubling down on a small set of industries, making sure that we know the ins and outs and we're relevant talking partners. That just makes for efficient dialogue. We can be much better advisors. Understanding your customer segments. So we're not chasing the long end of the tail, the smaller customers. We know exactly what size and complexity are required for them to appreciate our setup. Also know the limitations. We know that the biggest of companies are probably going to bigger players than us, so not waste your time on that either. Those are some of the elements that have definitely worked. And then I think that perhaps the final one is our operating model, where we've over the years matured this, that we can draw on resources from any Columbus country to solve a given task for a given customer. And that makes it so much easier and more profitable, to be honest, for us to develop deep pockets of expertise. If you do that for every country, you can't have very high usage of that capacity because they are so narrow that one geographical market is simply not enough to build it. So we need to deploy them across all our geographical markets.
And it would be a crime not having someone from the IT sector here and not talk about AI. How is that going to impact you in 24 and maybe a little bit on the longer run?
So the AI agenda is everywhere, and it's for us as well. There are so there's definite potential for us. Is it a growth driver? Of course it is. Currently, I would say we are very concerned with both for ourselves, but also for our customers. To how do you take the first steps? How do you get started? How do you get momentum? Because to imagine the opportunities and the potential of the long-term wins is actually, I wouldn't say easy, but that's a very thankful exercise. But when it comes to the pragmatic challenges of getting started and scaling this within big corporations, it's a different matter. So I would say at the moment, there's a lot of short-term possibility in the first steps. Some of them are not mind-boggling, but they set us up for future success, and I think that is a lot of the potential in 24. And then we will see. It's a momentum game, and it's very hard to even perceive the full magnitude of what can be achieved towards the latter end of our strategy, and after that, so that is front of mind right now.